Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Joe Tigay, Managing Partner at Equity Armor Investments, to discuss trends in the Nasdaq-100, the Nasdaq-100 Volatility Index, and introduce the Trade Talks audience to EAVOL, a Nasdaq-100 Volatility Hedge overlay strategy. Joe, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
Let's start with an update on the Nasdaq-100, which is outperforming, yet again, the other major averages this afternoon.
Yeah, it's up, kind of a little bit of a mixed day. We're seeing tech and the growth do well again. That's been the case for some time, certainly benefiting off of these low rates and the stimulus continuing, more money coming into the system, more money going to companies that people like to buy.
And Joe, are you seeing anything in VOLQ, of course, the Nasdaq-100 Volatility Index, that indicates it's time for a pause? And then how could a 3-day weekend impact that?
Yeah, great question. Now, yesterday, of course, we saw a big move in the Nasdaq. We had a 150-point drop in the middle of the session. That is a reason why we're still continuing to see this elevated volatility. Now, it was interesting. Intraday, we had this all-time high in the Nasdaq, and the VOLQ was not on a relative low. Maybe that was a sign for me that people were still betting on some volatility to happen. We got it intraday. And yeah, that's why the VOLQ has not settled into a 2019 range. We're still looking at a 2020 range with this elevated volatility. With the 3-day weekend, there is some suppressed volatility. People take that day out of the model. There's one less trading day for the next 30 days. People are expecting less volatility because, of course, there's one less potential day for there to be volatility. Now, when that day comes out of the model next Tuesday, we will see a snap up in volatility, and we will see those indexes, volatility indexes, VOLQ, rise after that. I usually see about 40 basis points, or about 2% of an increase we could see after that date comes out of the model.
And of course, for the audience, we have a 3-day weekend in the United States on February 15th. That Monday is President's Day, which I just realized myself. So that's why we're talking about 3-day weekends. Joe, let's review. It was a nice surprise. Let's review EAVOL, the trading strategy, and how investors can use it in the current environment.
Yeah, Equity Armor has teamed up with the Nasdaq. We have the EAVOL Nasdaq-100 Volatility Hedged mutual fund, which gives investors access to EAVOL, which is a vol mixed future strategy, which protects to the downside, of course. Now, people need to understand we use volatility as a negative correlation to equities. Of course, we get the benefit when the market's lower, but our experience and our know-how in how to trade it really allows for both the best of both worlds. We get the protection to the downside. We're also getting equity returns to the upside because, of course, what people get about volatility is that it goes the opposite direction as the market. The Nasdaq's down, volatility's up, everyone gets that. But what people don't necessarily realize, and a lot of our tail risk funds miss, is that when volatility goes up, it's probably going to come back down, and the market's probably going to go back higher. You look at the past 50 years, that's what goes on in the markets. Equities go higher, volatility stays the same. So what we use is we use these futures contracts. We are able to harvest volatility when it goes up, put it back into the market when it's cheaper. And in that fashion, we get market returns with a smoother path.
And Joe, to wrap up here, how is this different than other volatility strategies? And is it more appropriate for short or longer term investors, or can it be used for both?
Yeah, most other tail risk strategies are good. Good for people expecting volatility. Which is a very good short-term strategy and a very bad long-term strategy. I think this is the reverse strategy. This is a long-term strategy. It's a buy and hold strategy. It's for people looking for Nasdaq returns, but a little bit less risk.
All right, Joe, appreciate the insight. Great to see you. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.